In the next 1 hour, I will be taking up all your queries, so don't forget to call us on the numbers flashing on your screen. You can also reach out to us on WhatsApp, both the numbers of which are available and currently flashing on the screens, ladies and gentlemen. Today, joining us are Avinash Kurakshakar, Director Research, Profit Mart Securities, who will be answering all your fundamental queries, and Sundar Keva, Technical and Derivatives Analyst from Ashika Institutional Equity, joining in on the technical front. Welcome, gentlemen. Thank you so much for giving us your time. Let's head straight into the first query. Now, Nirmala from Ahmedabad has written to us on WhatsApp saying that she's purchased 100 shares of Spandana Sphoorty at 740 in early 2024. She's asking whether she should hold or sell her positions, and she's asking a long-term view. Now, Avinash, I'd like to first take this question to you now. Nirmala is currently sitting on a loss of about 45,000 rupees. And if you just look at the past 1 year trend, the stock has fallen significantly. In fact, from around 800 levels, it has dipped to about 282. So that's a massive fall that the company has seen. What should an investor like Nirmala do from a fundamental perspective? Is it a good idea to hold on to this position for, say, the next couple of years?
Yeah, good evening, for inviting me. And basically, I want to tell you one thing, that this is not a bad company, but unfortunately, all of us are aware that the microfinance cycle is currently very bad. And we have been talking to a lot of companies, a lot of banks which operate in this segment. I think it could take another, say, a couple of quarters before we see a little bit of normalcy coming in. Some of the private sector banks have also incurred heavy losses here. And I think the recovery definitely seems to be in sight. Now, coming to this investor which has purchased the share at 740 and now the price is around 282, I would not advise the investor to book a capital loss. But I think if the investor can hold on for the next at least 2 years plus, it's a difficult decision. But I think if the investor has the patience and the conviction, then I think he should hold on to this stock, because once the recovery in the microfinance market comes in, I'm quite sure that Spandana Murthy would bounce back. It's not a penny stock, but yes, the cycle has gone bad, and I think to that extent the stock has been hammered. So I think keep a 2-year view, and I think then hopefully the risk reward could be better.
So, Sundar, now fundamentally speaking, Avinash has recommended Nirmala to hold her positions, which is 100 shares of Spandana Sphoorty at 740 rupees. And he said that, the stock price could see a recovery in the next couple of years, say 2 years, for instance. Now, as a technical expert, what would your target price for the next 2 years for this particular counter be? And also for anybody who's accumulating or is interested in entering the stock, what would your suggestion to them be?
See, Malika, firstly, I'm referring to 1 week time frame, as the viewer said that it has a long-term horizon. So, looking at the past 3 week performance, the stock has recovered from 193 odd levels, and currently it is trading around 182 levels. But I would say that it is not a good time to book your losses. Either it should be on a hold kind of scenario, and if anybody wants to add onto the stock, then if the stock has given a breakout, say around 350, because there itself is an recent high which is made on previous week. So I would recommend, if the stock breaks above 350 levels, then only then we can add on to the position. And additionally, Malika, I want to say over here that there is one short-term indicator, 20-day 20 week moving average, which the stock price is trying to give a close above. So I would recommend this to hold the stock, and if the viewer wants to place the stop loss, then the stop loss should be placed at 190 level, where the previous low is made.
Okay, got it. And now we have Amol. He's joining us from Noida on the phone line. Hi, Amol. Good evening.
Hi, good evening.
Please ask your question.
Yeah, actually, I have 250 shares of AB Capital.
Okay.
And at 196 rupees.
Okay.
So I just need a short-term view, like what should be the near-term target and where should I put the stop loss?
Okay, got it. So Sundar, since our viewer wants to know, Amol wants to know a short-term view on AB Capital. Now, he bought 250 shares of AB Capital at 196 rupees a piece. He has been able to make a profit of 829 because the stock has not traveled so far. It is currently hovering around 199 levels. What would your suggestion to Amol be? especially keeping in mind how the stock is technically trading?
Yeah, so Malika, the stocks look positive on daily time frame, and as I can say that the viewer has bought it, say 1 or 2 days ago. So I would say that the stock look positive to me on the chart, and apart from this, the stock is showing a good higher highs and higher low formation, which is a kind of a good reversal pattern. And also, if you see, uh, from past few days, the stock is into a tight range, but I think so that if the stock gives a breakout about 208, then the stock could dash till 250. So I would recommend the viewer to hold this stock, and if the viewer wants to place the stop loss, then the stop loss should be placed at around 180 levels on daily close basis, because there is an important support level to watch out.
Okay, and very quickly, Avinash, I'd like to get your view on the financial services space as well, because it's been, the talk of the town. And what would your favorite counters in this space be, if you can tell us a few?
No, I think clearly, I think with two interest cuts announced by RBI and plus budget reliefs announced in the budget for, increasing the tax slab level, my sense is that most of the NBFC companies, like Bajaj Finance, commercial vehicle, financing companies like Shriram Transport, these could be very good bets. Plus, of course, you could not ignore the banks. The public sector banks are also going to benefit. So my sense is that, financial space are going to be a lot of more vibrant activity in the next few quarters, considering that once the interest cut cycle begins, you could also see several housing finance companies benefiting, because once the interest cuts are announced and they get implemented by the most of the NBFC and the banks, I think you'll see a kind of a demand growth coming in, from a lot of latent demand buyers. So my sense is, you look at the housing finance companies, a kind of a little conservative play is LIC Housing Finance. I think that could also be a good bet, because it enjoys LIC parentage and is amongst the third largest player in the housing finance market. And Bajaj Finance, the numbers reported were pretty robust. I think they should also benefit. And of course, Shriram Transport is a very good bet, considering that it's beaten down from a very high level. But I think as the CV cycle improves and as the financing rates come down, I think you could see a good amount of pullback even on this counter. So I think net public sector banks and the NBFCs which I mentioned can definitely be accumulated.
Okay, that's a good suggestion over there, Avinash. And now we have Ramachandra's query. He's written to us on WhatsApp from Andhra Pradesh. He currently holds 9,000 shares of Suzlon Energy at 55 rupees a piece, and he is seeking a one-year view on this one. He's made profits up to 17,000 rupees in this one. Sundar, what is your view on Suzlon Energy? Because it's been trading, say, almost sideways since November of 2024. When do you see a dramatic movement happening in the stock?
So, Malika, I am referring to the daily time frame, and I can see that the stock is into a tight range. The range is from 57 to 49 odd levels. Coming back to your question, when can the stock move? So, I would say that if the stocks close above 62 levels, then the stocks could dash till 72 or 75 odd level. Other than this, I would say that the money would be stuck into this range. So, above 62 level, I am positive on this stock, but not at this level.
Okay, that brings me to Avinash. Avinash, Suzlon Energy, hailing from the renewable energy space. There is a lot of competition, plus the space is now receiving traction because of the government's focus on this space and slowly segueing into renewable energy. Do you think Suzlon Energy is going to be the beneficiary, a leading beneficiary rather, of the kind of concentration the space is seeing? And do you think the current valuations are justifiable for how the company stands today financially?
Yeah, I think, Zeke, my sense is that Suzlon already enjoys a record order book. So I think they don't have any dearth of business for the next 12 to 15 months. But I think you must understand one thing, that, the capital structure of the business is extremely, disproportional. In fact, the equity capital is very large. So, there are many investors and traders who have got stuck up at higher levels. So any high level the stock achieves, there would be some selling pressure. But fundamentally, I think, if the investor can hold on for the next 2 years, I think he could expect a decent risk reward. 1 year, I believe, is too short a period, because the markets have already discounted to a large extent 1 year forward numbers. So, unless the investor has a 2 year kind of time frame, from these levels to expect a risk reward would be little, difficult. But next 2 years plus, if he can hold on, I think he could definitely look at a better risk reward.
Okay, so that's the view on Suzlon Energy. Now we have a caller joining in from Patna. His name is Nilay. Hi Nilay, good evening.
Good evening.
How are you doing, Nilay?
I would like, fine.
Please ask your question.
I would like to have a view about Ratnaveer Precision Engineering.
Okay.
I was earlier holding few of to 300 shares, but I sold it at higher level. But it has fallen, and since then it has been kept on falling. Whether it should be bought again for a long-term view?
At what level did you sell these 300 shares?
180.
180 rupees. Okay, and it's fallen significantly since that time. So your main question is whether or not you should enter the stock again, correct?
Yes, yes.
Okay, okay. And do you want to enter for a short period of time or a long term?
It's a long term, but if opportunity is there for short term gains, then
okay, then
I
why
will
not?
book it.
Okay, okay. So Sundar, I'll take this question to you first. Ratnaveer Precision Engineering is a stock that Nilay has a query on. He seemed to have invested in this stock before and about 300 shares, and he sold them at 180 levels. Now the stock has fallen to 132 and has seen cuts of about 30% in just since the start of this year alone. How do you see the stock performing, and do you see any short-term opportunities for Nilay to enter again?
See, again, Malika, referring to the daily time frame of this stock, I could say that the stock is currently into a tight range from 17 February to current to till date, and I could not see any recovery because if I see the broader trend over here, it is creating a classical lower low pattern, which is a characteristic of a downtrend. So I don't see any recovery as of now. But yes, if the viewer wants to jump into this trade, then I could say that above 153 levels, because that is an important resistance level to watch out. So above 153 levels, the stock will give a fresh breakout and new buying can emerge, but not at this price because the probability is high that money could be stuck at this price. So better to trade the breakout above 153 daily close basis could be a good opportunity to buy.
Okay, okay. So while that being your technical outlook, Avinash, I'd like to also get your fundamental perspective on this particular company because it hails from the steel space, and as compared to its peers, how do you think this company is positioned?
Well, I think, we had suggested the stock quite some time back to our clients, and we had advised profit booking when the stock crossed about 200 odd rupees. Now, fundamentals of this company remain quite good. Last year, they reported a profit of 39 crores. This year, I think they should cross at least 45 crores. But I think looking at the price trend, which has happened, a very severe price depreciation has happened from the top. So I think whenever this kind of activity happens just ahead of the quarterly numbers, I think one would like to be a little cautious. So I think, since the investor has not bought in, I would suggest let the fourth quarter numbers come in. The January to March numbers have not been declared. So once the numbers are out, there would be much better clarity on the outlook going forward as well as the performance. And at that point of time, the stock could possibly be accumulated. The stock is of course trading at very attractive valuations. It came with a public issue price of 115. It's trading at 130, so it's almost available at the same price. But I think it's better to wait for at least a month. I think in the next 2 to 3 weeks, you'll get the results. After that, one could take a fresh review.
Okay, okay. So it's better to wait and watch the report card and then take your decision on Ratnaveer. Now we have Mahesh calling us from Chennai. Hi Mahesh, good evening.
Hi, I just wanted to understand the entry level for Equitas Small Finance Bank. We wish to hold it for at least a couple of years. And looking at the quarterly results, which does not sound, does not appear to be good. So I just wanted your expert opinion on this.
Yes, definitely. I'll get you the expert opinion, Mahesh, but I just want to understand why, despite of a poor quarterly number, have you still decided to go ahead and invest in Equitas Small Finance Bank? What is keeping your interest intact?
Yeah, I'm very optimistic on small finance banks because of the financial inclusion and the kind of market that for small finance banks would look at in terms of catering to the rural population. Okay, so I guess the scope is very high in terms of getting the unbanked population into the banking system. There they will do a major role to play. So that's the objective.
Okay, okay. Mahesh, you have opened the door for a lot of thinking on this subject. Avinash, I'll take this question to you. Mahesh from Chennai currently wants to know whether this is the right entry point for Equitas Small Finance Bank. And I'd also like you to give us a view on two sides of argument when it comes to small finance banks. Number one, as Mahesh already mentioned, because this could really interest viewers. On one side, where these small finance banks are catering to financial inclusion and getting rural people access to banking and financial institutions. On the other end, there is this argument and worry of unsecured assets, asset quality drooping down, unsecured loans affecting margins of so many of these banks. What should an investor do, and how should an investor look towards a bank like Equitas Small Finance Bank, which comes from the unsecured or rather small financial bank space?
Well, I think first of all, I think small finance banks have lost their charm largely because, as I told earlier, that a large part of their portfolios are unsecured loans and microfinance loans. And that is the key reasons you've seen not only results of Equitas, but Ujjivan Small Finance. Almost all the small finance banks have reported a dismal set of numbers for Q4. And I think, as I told you, this cycle within the microfinance market is unlikely to improve, at least for the next couple of quarters. So till September, we may see continued pain in this part of the market, especially microfinance. And to that extent, I think any immediate re-rating in these stocks is not possible. But somebody who wants to take maybe a 2-year call on this sector could definitely look at looking at Ujjivan or maybe Equitas, because these are fundamentally very solid banks. It's just that the cycle has been bad and banks have been hit very badly. How much recovery happens? Because normally unsecured loans and microfinance loans get a better rate of interest, but the risk quotient is also high. So to that extent, investors who are investing now should realize that unlike investing in a public sector bank or maybe a large private sector banks, the asset quality is going to be always a little vulnerable, a little under threat, because these are small accounts. And most importantly, the cost of funds for these banks is relatively high as compared to a public sector bank or a private sector banks. So my sense is that it's going to be a little difficult for them. But somebody who can take a 2-year view and possibly, invest not in a lump sum, but maybe can buy, say, 25% now, wait for the Q1 number of financial year FY26 to pan out, he could possibly time it better. But definitely in the short term, don't expect any fireworks. Over the next 2 years, things could get definitely better.
So small steps, baby steps towards this space. And viewers, we'll have to slip into a short break, but keep sending in your queries on WhatsApp and call in. We will be right back for Ask Profit. Stay tuned to NDTV Profit.
Apollo Tyres, now there's a buzz of a positive corporate development related to related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm. In the last 1 month, if you see, the share prices of Gensol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong,
right,
and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam. Funds meant for the project were funneled allegedly back to the promoters, the Junkie brothers. What did the money buy? Not EVs, of course, but a lavish flat in Gurgaon's luxurious DLF Carmelias.
India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the
Hello and welcome back to Ask Profit, only on NDTV Profit, a show where you can ask all your stock related questions and our experts will be joining us to answer all those questions. Today we're being joined by Avinash Gorakshakar. He will be answering all your fundamental queries, and Sundar Kevat, who will be answering all your technical and rather short-term queries. So do pick up that phone and call us on the numbers flashing on your screen. Right now we're being joined by Suresh from Hyderabad. Hi Suresh, good evening.
Hi, good evening.
Tell us your question.
Yeah, I'm holding Natco Pharma.
Okay.
80 shares where I'm holding at 813.
Okay.
So recently it gave a breakout and again it came back to the same level. So my query is like I am for long term, looking for long term, like more than a year. So can I take a fresh entry now? Already I'm holding, but can I add some more now?
Okay, okay. And you're a long-term investor, correct? Okay.
Yeah, more than a year. More than a year.
Okay.
Yeah.
Avinash, Suresh from Hyderabad currently holds 80 shares of Natco Pharma at 813 rupees a piece. Now, he did mention that the stock recently fell, I think around the month of February, quite sharply, and has been now trading around the 800 levels for quite some time. How do you see the company's fundamentals, and would you suggest our viewer to add more units of Natco Pharma to his portfolio?
No, I think he can continue to hold, no doubt about it. But see, Natco Pharma came down significantly in the month of February, following reports that in US one of their molecules was not, approved, and that was the reason there was a significant amount of crash. But later on, there was some clarification from the management. But we need to see, numbers getting reflected for the molecule which they have decided to launch in the US market. So I think, clearly fresh buying could be advisable only once we get the Q4 numbers and we get some sense of clarity. Because as all of us are aware, ever since Donald Trump has announced tariffs, pharma is also one sector which is going to come under a lot of pressure. In fact, Natco's large market is primarily the US market. So I think we'll have to wait and watch. So I think it's better to, hang on. He's already in the money. So I would suggest, it's better to wait for the Q4 numbers and await the management commentary and later on take a fresh review.
Okay, that makes sense. And now we have Suresh Kumar joining us on the phone line from Lucknow. Hi, Suresh Kumar. Namaste.
Namaste.
Please ask your question.
Yeah, so I'm asking about this is stock named Capacite Infra Projects Limited.
Right.
Which I purchased at average price of 439 rupees. And 56 shares I have taken through small case. There was some recommendation came, but now this share has gone down to 359.55 something.
Correct.
So what is it like? What is the call?
So you currently hold 439 shares of this particular company?
No. 56.
Okay, 56 shares. Okay, 56 shares bought at 439.
Yes.
Okay. And do you want to continue holding in this stock for the long term?
Yeah, basically that's what I want to understand. Like, what should be the approach? Should I hold it, or I should book the loss and invest somewhere else?
Okay.
Because
Understood. Got it. Avinash, I'll take this question to you because technically speaking, Capacite has shown quite a movement in the stock price. If you go back and look at the one-year charts, has been very chippy-choppy. And now that a viewer like, I forgot his name. Yeah, Suresh Kumar. So a viewer like Suresh Kumar currently holds about 56 shares of Capacite at 439 rupees a piece, and the stock has fallen to 360 levels. What would you suggest Suresh to do?
No, I think fundamentally, the business of Capacite Infra is definitely looking good. I think they are basically into construction EPC projects, and they've got very marquee customers. So basically, there's no dearth of business. The company has an order book of in excess of 3,000 odd crores. I think execution was the challenge earlier, but I think there also the management commented after the third quarter that execution could be a lot better. And hopefully, I think when the private capex is picking up, so I think a lot of new orders could also come in the financial year FY26. So I think my suggestion to the investor is I think he has to give in at least 12 to 18 months here. There are many investors who got stuck up in such kind of mid-cap companies. But unfortunately, I think once the timing goes wrong, investors start thinking the company is bad. This is a good company, but I think you need to now stay invested for a slightly longer period before earnings catch up for FY26. So I think just keep a time frame of 12 to 18 months and continue to hold. I would not be surprised that thereafter you could get a decent risk reward.
So a good company and must hold for the next 12 to 18 months is a suggestion Avinash is giving you. But on that note, viewers, we'll again have to slip into a short break, but do keep sending in your queries on WhatsApp as well as call in on the numbers flashing on your screen. We will be right back. Stay tuned.
Apollo ties. Now there's a buzz of a positive corporate development related to related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm. In the last 1 month, if you see, the share prices of Gensol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, right, and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam. Funds meant for the project were funneled allegedly back to the promoters, the Junkie brothers. What did the money buy? Not EVs, of course, but a lavish flat in Gurgaon's luxurious DLF Carmelias.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the
Hello and welcome back to Ask Profit only on NDTV Profit, a show where you can ask all your stock related questions and we would answer them through our experts. Today we're being joined by Avinash Gorakshakar on the fundamentals and Sundar Khewat on the technicals. So do call us on the numbers available to you. Right now we're being joined by Teja from Andhra Pradesh. Hi Teja, good evening.
Madam.
Hi Teja, what's your question about?
Madam, I have 5,000 shares of Trident at 53.
Okay.
I want to hold for long term, that means for 10 years. Can I hold or can I book loss now? Please suggest.
Okay, sure, Teja. Avinash, I'll take your fundamental view on this one. Trident as a company has fallen more than 50% from Teja's buying price, and the stock is now trading around 27. Teja bought them at 53. He currently holds 5,000 shares, which is a massive number of stocks of one particular company. He is asking whether or not he can hold on to Trident for the next 5 to 10 years. So he has a very long-term horizon on this one. What would your suggestion to our viewer be?
I think you can continue to hold. See, because first of all, Trident is into textiles as well as paper. And I think the recent correction has been because, both the textile as well as the paper sector had gone through multiple kind of problems. I think textile is one space also which is a large exporting kind of segment to the US market. The stock is also corrected because of this factor because, we don't know what is the tariff issue going to be. Tariffs which have been announced now are of course much better than countries like Bangladesh, but definitely Trident gets a large portion of its revenue from textile exports. They largely are into territorial. So I think, if the investor can wait for the next 12 to 18 months, FY26 should be a lot better. Of course, what kind of strategy the company plans to counter the tariffs and how it manages to, increase its revenue is something which we'll have to watch out for. I think a better clarification could come in once the FY25 numbers are out. Once the Q4 numbers are out, we could possibly hear out the management. But I think since he has a very large quantity and the stock has corrected to 26, 27 level, I don't think, anything beyond this looks possible. So the worst seems to have been, discounted in the price. So I think he's just got to hold for the next 12 to 18 months and keep the conviction alive.
So keep your conviction alive on Trident is a suggestion Avinash is giving you. And, Sundar, I'd like to get your technical perspective on this one as well. Technically speaking, how do you see the stock performing in the next couple of years? I know it's very difficult to give a target price for the next decade, but even if you had to judge and see how the stock would travel in the next 1 year, what would your target price be for Trident?
See, Malika, referring to the weekly time frame of Trident, I could see that from past couple of weeks, there has been some kind of buying pressure, which is igniting this stock. And apart from this, I would like to say that there is an immediate resistance of 20-week moving average, which is somewhere placed around 28.3. Now, if the stock closes above the 29 odd levels, then only then I could say that the stocks look positive to me on short term. And coming back to your question that the long-term target for the stock. So see, if I talk about the history of the stock has risen from 7 rupees to 70 rupees. The stock has corrected very sharply, and I wouldn't disagree with on that part. I would like to say that if somewhere the stock close above 35 level, because where the recent important high is formed, if the stock cross above 35 level, then only then I could say that the stock could reach till 70 odd level. But in short term, if I see the short term, the price has actually formed in higher high pattern in daily time frame, which is a classical sign of an uptrend. So I would say that this stock to be keep on hold, and if the viewer wants to place the stop loss, then the stop loss should be placed at around 23 odd levels, which has been formed by the recent lows.
Okay, thanks for that, Sundar. And now we have Raju from Bengaluru joining us on the phone line. Hi, Raju. Good evening.
Hi, ma'am. Good evening, ma'am.
Please ask your question, Raju.
Ma'am, Motilal Oswal 150 quantity, average price 750. Profit loss, ma'am. Today I was bullish candle, ma'am. Short term 9 months, ma'am. MK Global Financer target by ma'am 850, ma'am. Short term, ma'am. Seller hold, ma'am.
Okay. Raju, I'll be able to take up only one of your queries. So I'm going to go ahead with Motilal Oswal Financial Services. Is that okay? Sorry.
Yes,
MOSL, right? Yeah.
Yes,
so, got it. So basically, Raju from Bengaluru currently holds 150 shares of MOSL at 750 rupees a piece. The stock did see a jump of about 9% in trade today. But Avinash, I'll come to you on this one. Seeing how the stock is done, and also MOSL incurred a loss for the first time in 5 years in Q4 of FY25. How do you see the fundamentals of the company going ahead in the future? Do you think MOSL will be able to recover and therefore also see that kind of translation come into the stock price?
No, I think, see, if you see the loss of 60 crores which they incurred in the fourth quarter, that is a M2M loss. And I think, the overall market had also come down quite significantly. The average daily volumes for the entire market had come down. So normally, most of the broking companies obviously generate a large part of their revenue from the average daily volume. So this was not only a case for Motilal Oswal. If you see the numbers for Angel One or some other brokers also, like 361 Wealth, they also reported very poor numbers. So the numbers were on expected lines. I think today why the stock has gone up specifically is because, markets have gone up. People are now confident that macro headwinds are slowly, disappearing. The US-China solution is also very nearby. India's trade deal with the US is also likely to get cracking very soon. And of course, crude prices have come down to below $60 a barrel. Our GST numbers are also improving. So all this points out that, at least the next 2 to 3 quarters are going to be good for capital markets. Once the capital markets improve and you see a lot of secondary and primary activity in the markets, you're bound to see, these broking companies doing well. So I think the investor needs to give in a time frame of at least 12 to 15 months and stay invested. I think this is just one bad quarter. That doesn't mean that the Indian capital markets will underperform. So I think if you can hold on, I think you can still make money here.
Okay, very well said, Avinash. Now, Sundar, while Avinash has already summarized how the circumstances of capital markets currently look like and how they're headed to be in the coming future, how does Motilal Oswal Financial Services technically look like on the stock exchange? Because it did see cut of about 30% just year to date. And are you seeing any kind of trend reversal happening anytime soon?
Yeah, Malika, I agree with that part. The stock has given a sign of a trend reversal, and if I see the stock has started picking up momentum from 514 odd levels, and it has recently made a high of around 770 levels, and today the stock has jumped up at around 9.42%. So I would say that the stock looks positive to me on the chart. And apart from this, the two important short-term and mid-term moving average, that is 20 and 50 moving average, are positive. And apart from this technical indicator RSI daily 14 period, it is also positive. So I would say that the stocks look overall positive to me. And if the viewer wants to add more quantity, then he should add about 780. And I would not be surprised, Malika, to see the stock trading at 1,000 in coming few weeks.
Okay, got it. And now we have Mahesh calling us from Mumbai. Hi, Mahesh. Good evening.
Yes, hi. Good evening.
Please ask your question, Mahesh.
I have about 120 shares of PVR Inox.
Okay.
I bought them in 2021 at average price of 1450.
Okay.
And I've been holding the stock. Want to know, the stock has not corrected. In fact, it's been hovering around less than 900 levels. I wanted to know a technical and fundamental view, short to medium term.
Got it.
Is there any prospects of growth in this stock, or should I just exit and book losses?
Interesting, Mahesh. I'll get this query answered. Avinash, I'll direct this question to you, but just to summarize what Mahesh asked, right? So he currently holds 120 shares of PVR Inox at 1,450 rupees a piece. He entered this stock back in 2021, and since then, the stock price of PVR Inox has fallen to about 956. That's the point at which it currently trades. Now, given this negative movement that the stock has seen, what would your fundamental advice to Mahesh be? Because very interesting what's happening with the movie space. I mean, theaters are trying everything out to get their financials back, and there is a relaunch of old films now, and theater itself has become versatile in terms of its uses. But how does a fundamental of PVR Inox now look like, and even if it's even if you could put some light on its peers as well?
I think my sense is, I think here the investor seems to have invested in PVR Inox at a time when the stock had touched its peak level. And I think there's no doubt that the company's business model is very robust. PVR was already one of the larger multiplex players, and after taking over Inox, now they're the largest multiplex player in the country. See, I think for any movie to be successful, you need to have a very strong distribution chain of screens across the country. And most importantly, PVR was one of those players which actually offered good quality and good ambience to the viewers. Of course, they charged a little more on their tickets, but I think finally, viewers could sense the sense of quality and service offerings from the company. Now, what should an investor do here is, I think he could possibly average some stock here, and I think take a 2-year call, because see, in India, movies are going to be made, and the Indian viewer is going to go to the movie theaters. Unfortunately, earlier people thought that the OTT regulation would actually minimize the impact of cinema theaters screens. But even after COVID, there's been a very good kind of recovery in this business. So I think, you've got to take a slightly longer term view, because PVR Inox currently trades at fair to expensive valuation. So unless the investor actually averages his cost now, it's very unlikely that he could recover his cost at least in the next 12 to 18 months. So I think, if he's got a long-term vision, the opportunity is very huge in a country like India. Movies are going to be one of the most popular kind of themes which people enjoy. And I think PVR is definitely going to benefit. But in terms of the share price, you got to keep a 2-year view, at least to get a decent risk reward.
Okay, got it. So, Sundar, that quickly brings me to you. How do you see the stock price of PVR Inox performing? Because since the time our viewer bought into this stock, that is back in 2021, it has seen 2-3 pockets of recovery, but has largely been on the downside. Now, even if it recovers, do you think it will be able to give any profits to our viewer? Because that's the main point of investing in it, right?
Yeah, so Malika, back to basics. The stock is currently into a sideways range, and if the stock break out above 1030, then only then the stock will positive to me. But looking at the chart, I don't think so that there could be a recovery very soon. But yes, if in coming weeks or coming months, if the stock crosses above 1030 odd levels, then only then I could say that the stock is positive to me. And then the next target, immediate target, will be at around 1200, and then too, if the stock crosses that level, then yes, the target should be big till 1400 levels.
Okay, understood. And now we have Sanjay. He's calling us from Noida. Hi, Sanjay. Good evening.
Good evening.
Please ask your question.
I had 300 shares of SW Solar, studying in Bhutan Solar, at the rate of 425.
Okay.
So I need your advice that I can add more at this level.
Okay.
Question is specifically for Avinash sir.
Sure. Avinash, there's a crisp question for you from Sanjay. Sanjay currently holds 300 shares of Sterling and Wilson Renewable Energy at 425 rupees a piece. The stock has dropped down to 272, although it was up about 5% in trade today. What would you suggest Sanjay to do? Should he average them at the current juncture or not?
No, I think, see, first of all, Sterling Wilson is now part of the Reliance group. Most importantly, I think if you see the Q4 numbers, there's been a very marked recovery in the operating profitability, in the top line growth. The company has a very good order book on the solar module side, and they are one of those players which operates not only in India but even abroad. So I think, clearly the investor seems to have purchased this share at the wrong time. It's a good business, it's a good company, but unfortunately the buying price has not been right. My sense is that here, if the investor can keep the patience and conviction alive for the next 2 years, he could definitely get a decent price, because the promoter is strong, the business opportunity is huge, and in a country like India, solar power is something which is now being promoted aggressively by the government. So to that extent, I think we are quite positive on the stock. But yes, for a reasonably good risk reward, you'll have to stay invested here for the next 2 years.
Okay. Avinash, I've been noticing that you have been recommending our viewers to stay invested for the next 2 years for most of the counters that we've had queries on. And that's really a very interesting, common suggestion that's been coming in from your end. Sundar, I'd like to take your view very quickly on SW Solar as well. Just the way the stock has been performing, it has seen quite a dip of about over like 10 to 12% since September of 2024 levels. It was trading around 700 and now it has fallen to 250. When do you see the recovery happening?
See, Monica, if the stocks crosses above 330, then I could say that the recovery is possible, because if I see from past few weeks, that is from 4th April, the stock has given a roller coaster kind of move, which is signaling some volatility, and there is some engaging going on in the stock. So I would say that if the viewer wants to add the stock, then yes, the stock is attractive to me because the stock is at its support. But then the immediate stop loss should be placed at 250. And if the viewer doesn't want to add and it actually wants to add at higher price, then I could say that wait for a breakout till above 330, and then you can add the stock till 450 odd levels. And if the stock also crosses above 450 odd levels in weekly time frame, then we could expect some higher targets till 700.
So you can stay invested with a stop loss of around 250 rupees on SW Solar. And with that, viewers, will have to slip into another short break, but keep sending in your queries and stay tuned to Ask Profit only on NDTV Profit.
Apollo ties. Now there's a buzz of a positive corporate development related to one of the related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm.